Good afternoon, everybody. I'm Stacey Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services. And we're back with you with our weekly wrap-up. And I'm sure everybody is aware of the volatility in the market last week. Graham, can you shed some light on what's going on?
Well, the market's continued to have a lot of volatility. I think we continued a 4-week drop out of 5. I think what really spurred this market on was some real fear coming out of maybe a large U.S. corporation, FedEx, that was basically made the statement that they're seeing a global slowdown, and that put continued fear into the market. Where we saw the S&P, we saw the Russell, we saw the Dow, so on and so forth, NASDAQ, all down 4 or 5+%. In some sectors within the S&P, down 6-7%. And those would probably be the most volatile, like technology, consumer discretionary, that pulled back the most. One thing that I think was really kind of front and center last week was what was going on in the bond market. I mean, we really haven't seen yields on 6-month, 2-year, 10-year yields like this since 2007, 2011, and I could throw out different dates, but they're approaching on a 2-year 3.9, almost 4%, 3.5+% on a 6-month, so on and so forth. And we're still seeing a deepening in the inversion of the yield curve. And if you're a student of history, that does indicate a recession's on the horizon. Now, it's not a fact. It doesn't mean it has to be a deep, protracted recession. So I think a lot of our listeners probably know we don't necessarily believe right at the particular time it's going to deep, protracted recession that we're moving into, but it certainly could be a recession. We could be in a technical one right now. But I don't know if that's any different than what we've been, kind of letting all of our listeners know and our clients know all along. Internationally, we're still seeing really high inflation for the British economy. We're seeing 10% year over year, or right at 10%. That's a slightly less, but it's still 10-odd%, where our inflation number is coming in at about 8.3 from 8.5. So we're still seeing high inflation. We are seeing rollover in the numbers. We just haven't seen it in the reports, the CPI reports that we'll be seeing over the next couple of weeks coming out. One other thing, Stacey, that I think is putting some fear in the market last week is a possibility of retesting those June lows. It's very likely, just from a technical standpoint, we could, just from a technical standpoint. Also, the Fed's meeting this week. And is the Fed going to raise 1 percentage point? Is it going to be 75 basis points? Are they going to continue that hawkish stance? I mean, that stance to really get inflation down by raising interest rates without hesitation. And I think the market is trying to price that in, that they're going to do what they have to do. And this was Fed's statement. They're going to do what they have to do to get inflation down. So I think it's probably in the cards that we're going to get a 75 basis point hike this week. I'm not necessarily in the camp that we need more than that. I think sometimes we just need to see how this evolves, because they've already raised interest rates a lot. And we do need to be careful that they don't over tighten in an economy that's already weakening. And that's what they want to have happen, right?
Right. Well, keeping all of this in mind, what would you suggest our viewers do?
Like we say, stay the course. You got a plan and strategy. I know our clients do here. If our listeners don't necessarily work with us, reach out to who you work with, challenge, inspect what you're expecting with your own plan, stay diversified, focus on quality. And if you've been light in the bond market, listen, I haven't said this in a long time. I think it makes sense to start looking at some of the bond areas. Look at the 2-year, look at the 6-month, look at the 10-year, look at longer dated or higher duration bond assets are looking more attractive because the yields have moved up so quick, so fast. So I think it is an area that, depending on your goals and objectives and your risk tolerance, I think it can be some areas that consumers look back at if they haven't been over the last couple of years.
Okay, well, that's an interesting take on things. Thank you so much, Graham, and thank you to our viewers for joining us today. And just a reminder that we do have our Retirement Planning Today class scheduled for mid-October. So if you or someone you know is at or nearing retirement age and you want to take a look at how to prepare for that process, please take a look at our website. And we have a link for you to sign up. And actually, I'm just going to drop a link on our Facebook page as well. So take a look and join us in class. Thanks again for joining us today, and we will look forward to seeing you again next week on the weekly wrap up. Have a great day.
Take care.